again, Thursday, August 22nd. We are here for a Stride Live. We're talking smart retirement planning for MSP owners. A routine guest on the show, Morgan Holmes. Morgan, thank you once again being here today.
Good morning, Casey.
So I'm excited to talk today retirement planning for MSP owners. We're going to talk about different entity structures, the pros and cons from a retirement planning standpoint for each. We're going to talk about what opportunities to plan for retirement. Where can you send your money and what are the considerations for each? And then also talk about what does it look like in terms of maximizing cash flow as it matters for your business to improve your ability to plan and save for retirement. So Morgan, without further ado, let's talk through. Let's say what it's different, the different types of entities and what the structures and considerations are for each.
Sure. So before I do, I actually ran across this quote the other day. The quote is, "Retirement is like a vacation in Las Vegas. It is considered a success if there's money left over." So, or when you get out of your trip. So, yeah, for
Love
sure.
that.
Interesting way to look at it, right? I mean, if you do it right, hopefully you have some money left over, and I think we're gonna try and provide a couple little tips on how to make sure that happens. So yeah, I mean, obviously, the structure of your business plays into that, right? I mean, depending upon the different type of entity you are, the options of what kind of retirement plan you can set up in that business changes. So, for example, sole proprietorships have fairly limited options in solo 401ks, SEP IRAs, those type of fairly simple arrangements. And when you're looking at a sole proprietorship or you have a sole proprietorship, the ability to, or how much you could put in or contribute to the retirement plan that you have set up really depends on the net earnings from that business. So again, the pros are most of those plans are very easy to set up. You can make sure that you have sufficient income in those business entities. The amount that you can contribute is easily computed. But the cons obviously are you have limitations on which plans you could actually set up and contribute to. Similar to sole proprietorships, partnerships and LLCs also have some limitations on the plans you can set up. And it's a little more complex in a partnership or a limited liability company that's being treated as a partnership for tax purposes. Similar plans, similar pros and cons, but probably the biggest con is it is a little more complex to compute, like profit sharing, stuff like that in a partnership. As corporations, most of our MSP clients are S corporations, so we're more familiar with what the plan options are there. Most of our MSP clients or our other S corp clients would have a 401k plan set up. The 401k plan can be used to make the employer contributions, and depending upon the amount of cash flow from the business, you could consider doing discretionary profit sharing contributions, where the business could take a deduction for the profit sharing contribution and fully fund or help fully fund both the shareholders contribution amount and then with some small discretionary amount for the employees. You have to, as with any S corporation, you have to focus on reasonable compensation and we would, when you're dealing with S corporations, you're also dealing with, currently we have this qualified business income deduction for 2024 and 2025. It's set to sunset. So the more you put into that discretionary profit sharing, for example, you're driving the business income down because you're taking a deduction for that, which results in maybe a little bit less qualified business income deduction. So there's a little bit of balancing act between, hey, I want to contribute as much as possible into my 401k, but I also don't want to lose these deductions, the qualified business income deduction. So it is a balancing act, when you're talking about, discretionary, funding in a profit sharing arrangement in an S corp or any pass-through entity. C corps, we don't really see too many of these in the MSP space,
Mhm.
but we do see them occasionally. C corps are, pretty much anything. You can do the 401k plans, you can do, cash balance plans, defined benefit plans. There are so many things you can do inside of a C corporation. The 401k, same with any other business entity, fairly simple to set up, not incredibly expensive to maintain, and very common retirement plan vehicle in a business entity. Some of those other retirement type arrangements, like a defined benefit plan, for example, requires actuarial computations and tax return filings and all that stuff. So definitely becomes more expensive to do or maintain a plan like that.
So we talk through the different entities, the pros and cons. And with C corps, they do experience double taxation, right? So that's also a consideration if you're choosing between, hey, do I want to be an S corp or C corp? Is understanding that they're both taxed at the corporate level, and then when they're distributed as dividends. Do I have that right?
Yep, that's right. That's right. So we're really talking about, what you're referring to as, distributions coming out of the business.
Mhm.
I think what we're more focused on is actually taking or making, discretionary. If you have a 401k with a profit sharing component, you can make a discretionary contribution, and that wouldn't be treated as a distribution. The business entity is essentially just funding that retirement, and then taking a business deduction. The employees are still going to do their employee deferrals just like they normally would, right? So for 2024, the maximum amount is 23,000 for a 401k. And if you're 50 or older, then you can also contribute the catch-up contribution of $7,500. So
Got it. Got it. What are some of the key considerations when a business owner is thinking, okay, what entity should I choose? How do I navigate the considerations for that when it comes to from a retirement planning standpoint? What are some of those?
yeah, I think the first consideration is what's the proper business structure from a
Mhm.
tax perspective, and then secondly
Yeah.
is what's the proper, how much do I want to do or what do I want to do for my retirement, right? So if you don't care about funding like the big maximum, the maximum amount that you can
Mhm.
contribute to a 401k is actually not 23,000. That's the employee, the pre-tax amount, but you could actually contribute up to $69,000 in 2024, right? So depending upon the plan that you select, you may or may not be able to contribute that full amount. So, if your business is doing well and you have a lot of cash flow, and if you're an S corp and you've been taking distributions, maybe you want to consider, instead of taking distributions out of the business
Yeah.
or all that is distribution, maybe take some of it and put it into one of these discretionary profit sharing, um, you know, as a discretionary profit sharing contribution to your 401k, and taking the rest of that cash out so that you can actually get a deduction in the business.
And besides the short-term deduction, what is the long-term benefit of putting that pre-tax or those dollars into a 401k instead of just taking it all as distributions and putting it into a brokerage account or something, some other alternative investment?
Yeah, that's a great question, because we see this quite a bit actually. So we see clients take the cash out of the business and put it in like a Schwab or a Fidelity or something like that. And when you do that, yes, it'll grow, right? At a normal, market return. But when you do it through a retirement vehicle, discretionary profit sharing
Mhm.
contribution, something like that, what happens is that it grows tax deferred. So your dividends and your interest and all of that stuff isn't flowing out to you, and you're not paying tax on that. So you actually get a little more growth because it's you're not paying tax on it as it grows.
And then you would just pay tax on it, to my understanding, when you start receiving those distributions from that account when you reach the retirement age, which typically most business owners are going to be in a lower tax bracket at that point of their lives or their careers than early on when they're having multiple or a single business and have a higher level income and maybe in those maximum brackets. So definitely makes sense for a long-term tax because, like you said, you could grow in a brokerage account, but you can grow tax deferred, which means you have more capital to start. So it's a larger base. And then you're also able to appreciate to a higher level since that investment's going to be able to take advantage of a higher starting point for compound interest. Definitely makes sense.
One con, actually, one con of putting it into a retirement vehicle versus a normal brokerage account is the selection of investment assets, right? So typically in a 401k arrangement, the ability for you to put into mutual funds or something like that, they're pre-selected mutual funds usually that you would be contributing to. So you have less options to invest in.
And that's why not all 401k plans and programs are created equal. Definitely need to shop around, whether it's a Betterment or Schwab or Fidelity. You just have to look at the holdings and get an idea of what makes sense for you. But definitely makes sense there. And then accessibility. If money's in a 401k, is that accessible? Can business owners use that? Let's say they need short-term cash or they want to remodel their house. Is that something they'd have access to while they're contributing before they hit that retirement age?
Yeah, so unlike an IRA where you can't borrow against it, typically 401k plans will allow you to borrow against the or up to a certain amount up from your 401k. So yeah, I mean it could be essentially the equivalent of a line of credit for a business owner, or if they want to use it to put a pool in or something like that, you definitely could borrow against your 401k if the plan allows for that.
And then when you borrow against your 401k, where do those, when you pay it back, that does go back to you, the 401k owner, correct?
It does. It goes back to you with interest. So you're essentially borrowing from yourself and paying yourself back interest. So
awesome. Now I know we kind of started getting right into it, but what it looks at, what are the different options? I know we talked a little bit between, like, let's say a solo 401k versus a SEP IRA. Can we just kind of talk about what are the best cases for each of these plans?
yeah. So for going back to the sole proprietors, I mean, again, your options are fairly limited, but solo 401ks are available to sole proprietors. And solo, the solo 401ks are really meant for like a single business owner, but spouses also count in that when you're talking about a solo 401k. SEP IRAs are also a pretty popular retirement vehicle for self-employed persons. I have clients that have had SEP IRAs. Once you hire an employee, SEP IRA is a bad vehicle. You don't want a SEP IRA. You want to convert that to a 401k or something else. But if it's really just an individual with a business, SEP IRA is perfectly fine. Simple IRAs are just that. They're very simple to set up. They cost virtually nothing to maintain. The downside to a simple IRA is it has a lower contribution limit than a 401k or a SEP IRA. So if your goal is to try and maximize your retirement, simple IRA is not a great vehicle for that. And then 401, the next kind of workhorse for retirement is the 401k. I mean, pretty much most business entities have a 401k. Again, they're very simple to set up. There's various companies out there that they just maintain kind of smaller 401ks and do the tax filings for them and all that, and also will help build a plan that's catered specifically to your business. So 401k is probably the most common retirement vehicle that we see.
Absolutely. I know many business owners, there might be some confusion around, hey, am I allowed to contribute to employee matching funds, or is there any that I have to require, like the type of plan where I'm required as part of having that to make a contribution? Does that exist across any of these type of accounts?
You're referring to like a safe harbor plan for a 401k?
Yeah, or when you have to match, like let's say your employee's contributing to a SEP IRA or a simple IRA, does the business owner, are they required to contribute a percentage to match whatever their employees are putting in?
Yep. So a simple IRA always requires you to have a match. Um, the others well, with the SEP IRA, there's no match because it's essentially just the individual owner that has that. 401ks can or can, don't necessarily have to have a match. If you want to do that profit sharing component, you have employees in there, you definitely want to have a safe harbor plan. And the safe harbor plan would likely require, or it does require you to actually do a match. So
Talk a little bit more on a very high level, just simply what is that safe harbor plan for those who might not or might still not be super clear on what that term, what that is.
yeah, so it'll have a match. Oftentimes, immediate vesting.
Mhm.
Essentially what the safe harbor plan does is it gets you out of the testing that needs to be done for highly compensated employees, and it then allows it allows the owners of the business then to maximize their amount of contributions while still they'll still be required to do some level of funding for profit sharing and matching, but it's usually a small amount. It allows the employer to really fund as much as they can into their retirement.
Got it. Now, when it comes to the 401ks, you mentioned it's 23,000 for the typical, if you're under 50 or older, for the maximum employee contribution. That 69,000 figure, where does that difference come from? Does that come directly from the employer matching, or can they do a one, let's say profits are higher at the end of the year, can they do a lump sum to the 401k as a employee benefit?
Yeah. So the 23,000 is what the employee can contribute to his or her own retirement plan pre-tax, right? So the employee, if they chose to do so, can continue to fund their 401k up to that maximum amount. It's just not pre-tax, so they wouldn't be able to reduce their taxable wages for that. If you're a self-employed if you're an S corp MSP owner or self-employed, you could do the $23,000 plus the profit sharing piece would actually be contributed by the employer or the S corporation. It just, you
Got it.
can't exceed the $69,000. So if you're able to, the employee, business owner, or the employee would contribute 23, and the business would then contribute the remaining 46, take a deduction for it, and then get that employee up to their $69,000 a year max.
Got it. And that's why I think we see so many common smaller agencies or MSPs or professional service companies where they like that S corp designation. Because yes, you have to go through the process of being a W-2 employee of your own business, but then it allows you to have access as a business owner to these. As long as you're paying yourself a reasonable amount of compensation, you are able to access this kind of, even though you are an employee your business, you can access it as a business owner and reduce your overall tax liability since it is a pass through entity ultimately at the end.
Yeah.
Um,
And SEP IRAs have the same limit. So the SEP IRA limit
mhm.
is 69,000, but again, it's computed off net business income, right? So, um, you know, you would need to have a pretty substantial amount of business income to take a SEP IRA contribution up to the maximum amount. Whereas in a S corporation, the employee could contribute their $23,000. The S corporation could contribute that profit sharing piece, regardless of business income. So
What are some of the other factors to consider? I mean, we've talked a lot, the four basic plans for, I'm going to stick probably with the three for our outside solo 401ks, the SEP IRAs, the simple IRAs, 401k plans. What are the considerations or factors for a business owner when going through this process of preparing and giving retirement benefits?
yep. So employees, the number of employees. So as I indicated before, if you are a business with employees, SEP IRA is not a great selection. So you would want to think about, employees. What do I want to contribute toward my employees' retirement? And then also the complexity and fees related to setting these up. So I also mentioned that simple IRAs are really easy to set up, really easy to fund, really easy to There's no tax return filings with a simple IRA, but your ability to contribute is limited, right? So with a 401k, a little more complex to set up, although not a whole lot. There is a tax return that needs to get filed for a 401k. But typically your plan administrator will prepare and file the returns for you. So 401ks, yeah, they cost a little more. They're a little more challenging, or a little more complex to set up, but it's easily done.
It's awesome. Now, in terms, let's say I'm a business owner, I want to do a 401k. What is the crucial factor of making sure that I have success with a retirement plan for myself and my employees? Where does that start when you're saying I'm doing this? What's the next step?
Yep. So if you want to contribute the maximum amount to your 401k, the 69,000, either the employee needs to do it or the employee and the employer need to do it together. And the key factor is cash, right? I mean, you're going to have to be putting that cash into a retirement account. And if your business doesn't have the free cash flow to do it, you won't be able to get to the maximum amount. So cash is king. So I would say cash flow is probably the significant factor. And so you might want to start looking at things like how are there, different tax strategies. Are my business operations appropriate to where I'm generating more cash flow, increasing sales, et cetera. So just ways to generate that cash is what you should be looking for.
Absolutely. And something that we're going to do, we'd like to post after is really a step-by-step plan for managing cash flow to achieve the goal of contributing to a 401k. But would you be able to go over kind of the high level steps, step-by-step approach of when a business owner is doing that to make sure they have enough in their cash flow when they're doing that planning stage?
Yeah, I mean, there's, I guess, a handful of high level steps. So one is just looking at what your current cash flow is, right? I mean, if you have sufficient cash flow, and you're comfortable that you're doing everything that you need to do to continue to generate cash flow, that's step number one, and that could be the last step for you. Step two is projecting out future cash flow, right? Like, yes, I'd like to make this contribution, or I'd like to do a contribution to a 401k up to the maximum amount, and some discretionary amounts for my employees. I may not have the cash now, but what will my cash look like before the end of the year, or before I actually have to make that contribution to the 401k on their behalf? Maybe setting aside 401k or setting aside some cash, so that you make sure that this pot of money is going to go toward my discretionary profit sharing contributions for myself and my employees.
Got it. So you've
Again,
analyzed, you say, hey, what's our cash flow? Do we have enough? We've projected, we have some future cash flow too. It should be enough. We've allocated for some of the operational side considerations. Then a business owner, they have the cash, they know they'll have some cash moving forward, and they put some aside. Well, what can an MSP owner do to make sure that they aren't in a situation where they're starting a 401k and then a year or two down the road, they may, or to maintain that ability to do that without hitting into a cash crunch? What are some of the steps there to consider?
or even currently, hey, I'm going to do this, and when I do it, I have zero cash left over at the end of the day, right? So
Yeah,
it's really making sure that the cash is there now and in the future to do retirement or proper retirement plan contributions. Obviously increase revenue, so increase sales, grow your business. Look at expenses. Are there expenses in there that you currently are paying that maybe you could reduce, right? So one thing you might want to look at is if you're not passing through credit card charges. We've seen this before where they weren't passing through the credit card fees to their clients where allowed. And had they done that, they probably could have had enough cash to contribute to the retirement account. So just looking for expenses, or expense reductions or optimization of revenue. I mentioned before, creating a cash reserve, like a separate pot of money that's just for the retirement account. Being fluid and just making sure that you're constantly monitoring revenue and expenses so that your expenses don't all of a sudden increase and causing you to have less cash to make those contributions. Yeah, I mean, tax reduction, looking at tax strategies to generate additional cash flow. So cash is a big expense of any business, or a tax is a big expense of any business. So if you can reduce tax, that tax savings could go straight into your retirement account. So
I think too, having a good tax strategy and plan throughout the year, it reduces that volatility that we see so many business owners face, where they may have only used the 100 to 10% rule to file their quarterly or estimate their quarterly filings, when in reality revenue's gone up more than 10%. And then they're in that, oh, we actually owe 8, 10, 12,000 more to our quarterly tax estimate. But if they had the plan from the start, and this common theme here, everybody, starts with a good foundation of bookkeeping and accounting. You need to know your data and numbers and have those processes work consistently. And then also making sure you're following the other operational guidelines. It doesn't matter what business you're in. Having 3 months of operating cash flow on hand or cash on hand is always great to have. It's a great little safety net. But then making sure you're routinely looking through this, because I think one of the issues that we see is you start a retirement plan, you start this from there, but a plan's only worth the follow through. If you don't stay on it, you don't continuously work with it, it then becomes a book on a shelf or a PDF in a folder that really doesn't move the needle forward. It doesn't give you an idea of, oh, if something changes, what do I do? Or if I'm following this plan, how am I measuring that success? So, Morgan, we've gone a little over here, but I appreciate this is a very deep topic. What's the 1 minute or 30 second? Too long, didn't watch, didn't have the time. I'm going to read the article. What's the 1 minute snapshot for an MSP owner looking to really have a smart retirement plan?
yeah, sure. So I think you pointed out probably one of the keys is to make sure you have a good foundation, a solid set of books. Understand your cash flow to make sure that you have sufficient cash to make a retirement contribution. Do you have the right business entity structure to fully maximize a retirement plan? And then from there, choosing the retirement plan that allows you to maximize your contributions. Yeah, I mean, those are probably the 4 key bullet points is, just, and then I guess number 5 is just keep doing it, right? It's time in the market, not timing the market. So the more you can put in sooner and continue to do it over a long period of time, the more likely that you'll be able to, end your vacation with some cash. So
It's awesome. It's awesome. Morgan, thank you once again for being on today and donating your time. I do appreciate it. This will be available live on our LinkedIn. It will be on YouTube. You can head to stride.services and check out more details around Stride if you're interested in improving your accounting foundation. Thank you, Morgan.
thank you, Casey.
Have a good one.
You too.